Hello everybody, happy St. Paddy's Day. TraderMerlin here with a nice frosty glass of Tullamore Dew in honor of the Irish. It's a happy St. Paddy's Day. I know it's not Friday. Normally whiskey is reserved for Friday, but I figured, you know what? When in Rome. So cheers everybody. Hope you had a fantastic trading day out there. Most everything was green except crude oil, so we got a lot to talk about today. Okay, as you guys can see, I made the point today to talk about luck versus skill, really. The luck of the Irish is what I played off today. And we're going to have Tillie Allison here in just a minute. She's actually driving back from the office, so we'll have her up here in just a couple minutes to talk about luck versus skill, which I'm sure many of you are attributing, not many, but some of you are attributing this great bull market run to a lot of skill out there. And for most people right now, since 2009, it's really just a lot of luck. You just buy and hold. To me, the real washout happened for me back in 2000 and also 2008, when you see a lot of people who thought that they were great at trading just lose everything because the markets went the opposite way and they were no longer in a bullish mode. So we'll talk about that today. Big shout out to Sava Brendan. Oh, good to see you, Brendan. Probably loving a lot of that crypto news out there today. Tony, Matt, Tom, Rajesh. Good to have you with us, Rajesh. Boss is out there drinking some Jameson at the ready. Love to have it. And I saw we got Les also said his wife is Irish. I'm obligated to drink. Of course. Is it just a specific day? Are you obligated to drink every day? Dana, good to have you with us. Ken and Jorge, Simon as well. So obviously great to have you all with us today. I'm going to start things off while I wait for Tillie to message me to say that she's at the ready. We'll run through real quick the markets, and then I know some of you are tuning in just to see Tillie and the luck of the Irish, so we'll get to that shortly. So let me go to your top 7, really. I'm going to start at the bottom and then work our way at the top, which was a nice rebound today for many of us who are holding significant crypto positions. But crude oil today. I actually received a question asking if I thought crude oil was going to revisit those $60 levels. As you notice today, it wasn't exactly appallingly bad, right? It was only down 0.56%. 64.44 is where you see crude oil futures at this exact moment. But really, what is the picture telling us? From a pure candlestick pattern formation, it actually looks like a pennant or flag formation. Now, what, pray tell, do you mean, Merlin? Well, with a pennant or flag formation, you're looking for a strong impulse move to the upside. And I think you could make the argument that in 5 days, moving up 15% is probably, we'll call that an impulse, right? A pretty sharp move. Great. Now, we move to the second part of the flag formation, which is simply saying you have a series or a set of, and this doesn't have to be exactly touching the tails, you have these topping tails, or the tops of those candles is getting lower. Great, that's no problem. That's just a reprieve. And then you have at the bottom here, you can make the argument that we're forming kind of a slightly upward slope, or maybe even horizontal, but that is what some would call a pennant formation. Bottom line is, the belief is that it's going to come to a crescendo at the apex of this triangle, and when it does break, it should move the distance of this the pole of the flag, if you will. So let's just do a little bit of drawing here, and I'm going to move this down, and let's say that it does finally break out above this line. It's unfortunate it won't let me move in TradeStation to future dates, but let's say we finally get this to cross somewhere right around there. That means that the price probably somewhere around here. That gives you a price target, a loose one at that, of right around, looks to be about 73.38. Now, of course, I'm not one that puts all my emphasis on projections and targets like that, but for me, it's great when they line up with something, meaning, does this line at 73.38 line up with anything that's significant from the past? So what we can do is we just arrow out of here. We will zoom over a little bit and see if we can find something. And lo and behold, look at this peak that you saw from early 2020, right? Going back into January of 2020, there was a spike up. And from that point, it did nothing but fall. So you might break that down into a smaller time frame, look for an area of supply in there, which would give you the precise entry point, and then you have all of a sudden a move back up into it. So this may actually pose a great trading opportunity for those looking at crude oil right around $73, $74. So just thought I'd start you off there. The 10-year, we'll talk about bonds. You notice that something interesting happened today on the bond markets. This is the price of the 10-year treasury, meaning the price of the bonds, not the yield. Now, at the end of the day, the yields are going to stay pretty much the same, but you see some pretty long topping tails above and below. That is generally indicative of indecision in the marketplace, so really waiting to see what happens tomorrow. Of course, Jerome Powell's comments today about keeping the Fed funds rate at near zero until 2023 certainly was viewed as a positive thing from the equity market perspective. It also did help the cryptocurrency market soar like Bitcoin. All right, moving on up, we'll go to the S&P 500, which is up 0.22%. Now, these also have these wild swings, right? You see a really long bottoming tail on this bad boy. When we split up that S&P 500 into a 5-minute basis, you can see why we put so much emphasis on those announcements from Jerome Powell and his team. Look at the move that came up right after that announcement was made at 11 o'clock. Boom. And then the second one happening at about 11:15 when he came out and did his press conference. So big swings out there in the S&P today, predominantly because of the FOMC meeting. For those that want to know how much did it move in that period, right as he made the announcement, it moved up to the tune of about 0.83%. We'll round it up and say 1%. But that's pretty big move, especially if you're leveraged with futures products. Getting a 1% move in 15 minutes will certainly either put nice chips into your pocket or take them away if you're on the wrong side of it. So S&P was your 5th place finisher. NASDAQ finally getting a little bit of a bounce back to the upside here, although not much. I'll go to the daily so you guys can see the bigger picture. It was up just a wee bit, but still, very far off those all-time highs. Got a ways to go, and I think it's very telling when you look at these three indexes, the S&P, NASDAQ, and Russell, right? The S&P is flirting and basically today making another intraday all-time high. The Russell, which we'll jump to here, it sold off a little bit from that high. Today they did some pretty big moves in the Forex market, Jorge. And of course, anytime you have the biggest central bank in the world or most influential central bank in the world, the U.S. Fed, you start to impact everything, especially because the dollar is the world reserve currency. For the Russell, again, it's just off its all-time highs, but the NASDAQ, as you can tell, has been way off those highs. And interestingly enough, yesterday it came right into an area of supply. We kind of double tapped that today. You guys see that topping tail here? It did bounce up, hit that area of supply, and then it looks like it came right back down. So still a gain of 0.22% for the NASDAQ, but nothing to write home about. All right, we already talked about the Russell. Move on to gold, which is starting to show a nice little positive move to the upside here. You can see it's out of the last 8 days, we've had like 6 positive days. That's pretty darn good. Actually, yeah, somewhere around there. So my numbers are close. So pretty good for gold, although I don't know if we're out of the woods yet. If we look at some of the analysis that like Brandon Wendell would do, you really got to get above this 1,800 mark, which, it's $60 away. It doesn't seem like a lot, but, we need to start making some significant higher highs here in gold to say that we're back on track. That said, the discussion today by Powell basically saying, hey, we'll keep rates extremely low for quite some time, fuels those inflation fears, which is why you saw some nice moves up in gold, and I think a reprieve buy back in on some of these cryptos that people felt were buying at a discount. One click decentralized finance investment, you say? Well, I don't know about one click, but I am all about decentralized investments. All right, the big story of the day. Not big, but the biggest gainer of the day. Bitcoin getting back on track to the tune of about 3.47%. It broke above $58,000 here just recently, but pulled back just slightly. It's funny. You look at how significant this move was. It doesn't look like much, but I'll just draw. Let me do snap mode here so we get the exact number. And then I can wonder where the hell Tillie is at. Come on, Tillie, get up back on the phone here. There is the 2-day drop, a 12.7% drop in Bitcoin in 2 days. In literally 1 day is what it says on the screen, but it's really 2 days worth of trading. And we've pretty much gotten back about half of that. Now, there's been some other very big moves in that crypto space. For those that, like myself, who own Cardano, Brendan, I think you're also a Cardano holder as well. That one is now going to be tradable on Coinbase, which of course, if anything says they're traded on Coinbase, that's a huge pop for them because it means that the retail population will have much easier access to get into it. Right now, it was only through Binance and through Kraken here in the U.S. that you could really get Cardano. That opens the U.S. market to it, which could be a very positive thing out there for Cardano. What else do we have? There was other major, some of these render coins like Render Coin and Golem also doing very well. All right, let me see. I'm going to do something here real quick. It's going to probably annoy you guys, but I'm going to kill my microphone for just a second. The only reason I'm doing this is simply because I'm going to be making a phone call here, and I don't want to torture you with the do. So bear with me 2 seconds as I call Tillie Allison.
Hi, yes, Merlin, I'm here. Can you hear me?
Got you loud and clear. All right. Woo. Well, maybe not loud. You're a little quiet, but it's all right. It'll work for today. I can always bump my audio levels later.
Hi, guys.
There you go. Oh, you got the cat with you today, huh?
Yeah, she's missed you guys, just so you guys know. Yeah, Taylor has missed being on the show.
Nice. How you been, Tillie? It's been a while.
Great. Yeah, doing very, very well. Here in Kansas City, I didn't realize if you have asthma. I don't know if any of you guys watching the show here today have asthma, know somebody that does, but all my life it wasn't a problem, and then all of a sudden it become a problem, and apparently it turns into walking pneumonia overnight.
Oh. That's not good.
So, no fun.
No. Oh, well, I'm glad you're feeling better, Tillie.
Yeah, thank you.
Tell you what, let's talk. Oh, wow, I'm doing all kinds of camera angles today. Let's talk about the topic du jour. Now, you sent in a couple things you want to discuss on today's show, but I thought because it's St. Patrick's Day, let's talk about the luck of the Irish laddie, right? We'll talk about trading versus luck there, because so many traders, they're talking about luck and they think that they're just such great traders, and bottom line, it comes down to just a wee bit of luck. Sorry, I won't do my Irish accent anymore. I apologize to anybody who is Irish. But you and I were talking about this. Let's discuss a little bit more about your thoughts on luck versus skill as a trader, and you had some trade examples that might be worthy of sharing.
Absolutely, Merlin. So we all know whenever we dive into the markets initially, a lot of what happens is luck, because we really don't have enough experience to run any numbers that we even know probable expectations. Mm-hmm. And I think it's through discovery early on in our trading that we start to realize what is, like today's rally in the NASDAQ. I was actually trying to position along the NASDAQ. The movement of that magnitude, I would say, is a, quote, little bit of luck, because they always say that luck is a result of skill sometimes. Knowing that we could get that movement during an announcement, but being long or short and on the right side of the trade, I would say that's skill. Mm-hmm. So looking to buy into, like, the NASDAQ was at 12 something 75, 275, something like that. This morning session's low, it was off about like 2.5 points, and got another opportunity though to get long because the movement was tremendous. So I would say that, like, the amount of the movement and the speed of the movement is luck, if you will. Mm-hmm. But being able to position long before that rally, that requires some skills. Mm-hmm.
You've been trading for some time as well. I mean, it's not like this is new. You've been through a bearish market cycle. One of my big challenges now, and sometimes I know I sound condescending and I apologize, but part of it is tough love as well, because I feel that anybody who started from 2009, March of 2009 or after, had one experience at a really bad market, right? Where it was really like, oh my God. And that was really just this past February, March, April, where we had a big sell-off. And I fell victim to this as well, and I'll give you an example. Back in 98, 99, there were periods where I was just killing it. I was doing so good in the market because my mindset is taught, like most people, buy and hold. I was predominantly going long in the marketplace, and of course, when the market's bullish like it has been, you really can't go wrong regardless of time frame if you just buy and hold something, whether it's for 5 minutes or even 5 years. But when we get that fundamental shift, when those chips are no longer bullish and all of a sudden every day seems to be a down day, to me that's where it really separates the traders who were just lucky before in a bull market and the skilled traders who are now saying, I've got a different set of weapons to trade the south side. Were you prepared for your first bear market, or did you struggle through it like most people do?
Well, I was, I think, when I really started trading was in like the .com bubble as it was bursting, and I didn't realize it was bursting. So let's just say this. I remember 2003, whenever I saw green candles on a price chart, mm-hmm. and I was like, whoa, wait a minute. Are these like, these are like big green candles and they're lasting for days and they're lasting for weeks. And oh my gosh, this is like starting to be like, I don't know, like this is a bull, because it was really my first exposure to the transition from a bear market to a bull. And then I never forget, in 2007, Merlin, I think I was actually, we were doing something with Online Trading Academy in 2007. And that's whenever the market did also flip again and cycle again. And mm-hmm. I remember, again, nearly falling out of my chair. I think at that time it was like a Texas trading radio show.
Yes.
And so I think whenever you've seen a few of these cycles, like the mortgage real estate debacle, whenever we saw it unfolding, it took weeks, months before it actually collapsed. And that's why whenever we had this flash crash, COVID crisis, if you will, The difference was the magnitude of speed of that flash crash. Anyone who's been trading long enough knows that the magnitude in which it falls down is the magnitude in which it will go up. But distribution over time, which is why I'm looking for those distribution zones. If we do have enough distribution zones over time, that results in a crash. And that typically only happens in, quote, and I use that word only, a higher interest rate environment that would cause one particular group to default and to be like a domino effect.
Yeah, I'm actually checking out the move up here from 2019 through 2021 on a weekly time frame, the S&P 500, to kind of illustrate that big flash crash. And that was one of those moments where there were a lot of people saying, hey, this is just going to be a one-off event. It's going to rally back up. And I actually thought we'd see a more pronounced downturn. I was actually kind of really hoping we were going to see more of a downside move, but we didn't get it. And now we're on to this, just beautiful move to the upside here. I'm hoping that when it finally does turn, that everybody is prepared for that. And I love the comment here that was just sent in by Les Gold. He says, luck is when opportunity meets preparedness. Yes, and I think I think skill is where opportunity meets preparedness, where you are ready for it, you have a set of rules, you act on it, and you pull your trigger as you're supposed to. To me, luck is, buying AMC stock at $3 and having Wall Street Bets pump it up to 10 or 15 bucks. Luck is being long Tesla, and all of a sudden Elon Musk tweets out about it and it shoots to the moon. Luck is knowing or being maybe short of pharmaceutical stocks, and you don't want to just be long, and all of a sudden they miss FDA approval. Those are luck events, right? Most of the skill side of this is saying I have to have a plan in place. I have a specific set of rules. I've got my discipline. I've got my stop losses. That to me is what creates skill out there. And I'll tell you, having done power trading radio for a decade, this one for 1 year now, you see the difference between luck and skill a lot, because a lot of the people who are just lucky love to boast about it and put it in your face. And you're teaching physical classes and online classes. I mean, you see people who deep down in your gut till that they're just such blind luck on their trades. But are you mean like me? Do you tell them, good, look, that wasn't skill, guys. That was luck. You didn't get that because you were good. You were just lucky. Are you mean like that?
I have a good time in class because I always say that if I see you adding zeros to your position, I know that you're gambling and you're going to get in trouble. I know if you're speeding. So I can recognize if someone's, quote, speeding, but associating any outcome in a class, whatever happens there, given the fact that I'm guiding the class, I would say that everyone has good luck because they're in an environment where we're encouraging that good behavior. And I agree that luck, is the outcome oftentimes of skill when everything is timed correctly. So no, I don't beat many students up unless I see them adding zeros without calculating position size. They start to roll the dice. Then I call them gamblers, and we have a good time with that. But I think that we have to anticipate that luck will be on our side. Like you're talking about being long certain stocks, whether it's AMC or Tesla. The fact that, you weren't, quote, short, being on the right side of the market is, quote, luck, if you will. The problem whenever people start learning how to trade, sometimes they want to short in a bull market. And, they lose their shorts. And that's whenever we start to realize that the luck's not on their side because they start to gamble. Yeah.
It's kind of funny. There is, since we're on the Irish, luck of the Irish, etc., and we've got a big group of Irish, or some Irish people in the group today, one of the things is, you got to look for, you've got to look for the pot of gold at the end of the rainbow, And obviously you think that there's two pots of gold. I'll ask everybody here, how many of you believe that a rainbow touches the ground? And just to get some chatter going on in the group, how many of you say yes or no, a rainbow touches the ground? Meaning you could potentially find the end of a rainbow. And I'll give you the answer here because I know there's like a 30 or 40 second delay. Rainbows don't touch the ground. So you could look all you want for a rainbow, but it doesn't touch the ground. It's a circle. And to me, I was going to use an analogy saying, in the analogy of finding your pot of gold, the luck at the end of the rainbow, to me, that's all about skill, plan, and strategy. But the truth is, they don't touch the ground. So you should never be looking for your pot of gold at the end of the rainbow because you will never find it. That said, can we find our pot of the gold at the end of a price chart? Yes, because that's going to touch the ground and also going to go to the sky along the way. And that's where the strategy and plan comes in. Sorry, Steve Hall. He says, no more accent. I can't help it. It's the luck of the Irish. It's the Tillie just bringing out my Irish roots, my European roots. Oh, Tillie, sorry, I'm having whiskey on today's show. All right, you mentioned to me earlier that you had a trade that you wanted to mention that was kind of on the luck side, right? Or skill or unlucky side?
So yeah, the NASDAQ futures, I chose the NASDAQ to try to short-term trade. And I always say try because I'm positioned long-term already. And so the short-term active day trading is like icing on the cake. And whenever I choose whichever markets I'm going to actively day trade, I was anticipating that we could get some movement in the NASDAQ from the lows of last week in a uptrend, rallying, as the S&P make all-time high. But at least with the NASDAQ, we've got a target. So the morning session low in the NASDAQ got retested before the news event.
Hold on, wait, real quick. When you say morning session low, Tillie, what time frame are you looking? Because I'm going to be drawing the charts here for the viewers.
I had an alert go off about 9 o'clock Kansas City time.
What time frame chart? 15-minute, 5, hourly?
Oh, so I like the 15-minute. I'll dial it down to a 5 to get some more active entries.
Okay, good. Got the 15 up.
Yeah, so whenever, though, an alert goes off, we could trade it on any time frame. The alert is saying that area is where we're expecting buy-in to come in. And then on any time frame, day traders might drop it down to a 2-minute or a tick chart to look for their entry. Longer-term investors could use an hourly or a 240-minute reference. But yeah, as far as like active intraday trading, 15-minute, 5-minute are real popular.
Okay. Yeah, I just wanted to say because I was drawing. So what were you looking at? You're watching that NQ, and I know you.
First of all, notice the lows at the 7 a.m. pre-market session.
Yep.
That those lows, so that would have been that. I'm not sure what time zone you're on there, but that's what we see on the chart. And then about 9:30 and then 10, how those lows formed reversals today pre-market, and then there was a pullback right before that explosive rally.
Yep.
Close to noontime on your chart there.
Mm-hmm.
And so trying to position long in any of those lows, just depending on your what your risk tolerance is how close can we get, to that distal line that formed, that low line we call it, a low line that formed that wick that dropped down at like 7 a.m. Yeah. A lot of people get trapped at that earlier basing there, the earlier reversal. So like 4 a.m. Kansas City time, think about what time it is over there in Europe.
Yeah.
So all that's money flow coming in from the Eurozone. But identifying where that one wick dropped at like 7 a.m. and using that as like a low line or a bottom line to stop, if you will, and trying to buy in as low as we can before we expect the market to eventually rally. We never know 100% which way it's going to go, but if you blow that out to like a daily chart or a weekly chart, that low line there on the NASDAQ at 12,930-ish, you blow that out to a bigger picture, and that's some solid buying, historically.
Mm-hmm. On a day like today, I'm one that is always going to err on the side of risk aversion, especially when I'm talking to an audience and giving them kind of ideas about where I believe things are going to go. On a day like today, it's a very telegraphed punch, if you will, by the Fed. What I mean by that is, it's no surprise that Powell said they're going to be cautious and worried about the inflation and they're going to keep interest rates low. Now, I don't have access to the plot charts, guys. I'm going to hopefully get those in the next day or two, and I'll show you the plot charts I was talking about where it actually showed that some of the FOMC members are expecting higher rates. But bottom line is there wasn't any real cause for concern with regards to today's announcement. It was almost like a sigh of relief for the equity market saying, okay, things are staying right where they're at. That said, we're talking about luck versus skill. Trading on a day like today, when you know that 11 o'clock Pacific time or 2:15 or 2 o'clock Eastern time, that this announcement comes out, to me, that adds an element of risk to my trading that I usually am not comfortable with. Are you shrug it off and just say trade as normal?
No, I think today definitely had specific environment anticipating the Fed announcement. So that's going to be like icing on the cake, like fire, gasoline on the fire. Mm-hmm. So I mentioned that I had an alert go off, and usually what most longer term traders have are alerts that inform us that the market is trading at where we want to buy or sell, because we're planning so many days, weeks in advance that I can't remember, whenever I was analyzing the market, where I saw an area of accumulation on the price chart, from day to day. I can't remember. So alerts are typically used to remind us that the market has dropped down to an area where we want to anticipate if we have pending buy orders that are going to get filled to make sure our stops and our targets are in, or to take advantage of volatility at that time, because when the market's dropping, volatility increases, and that's a great play for some option strategies. So the alert system is really important, I think, in any active trading strategy, because it's not possible for us to recognize everything all the time or remember. And so when an alert goes off, everyone that I know, that would bring us to the attention that, hey, the market could offer us an opportunity to possibly set up a longer short position if all then the criteria is met, like on said time frame, if we can calculate the risk to fit our certain account, that we could then particularly trade that setup, or is the zone or where we're going to buy such a wide range that the risk is greater and we could only use that in our longer term accounts.
Right.
So a lot of math and calculations, has to be done depending on the account size.
Yes, and you do like your math and number crunching, if I remember. Tillie the number cruncher.
In tens. I only do everything in tens.
That's it.
It's either 10 ticks or 10 points or a quarter point. If you guys know, do any of you know Tennessee Mom Pa Kettle math? And Kevin caught the long today as well on the NASDAQ. So I think he took the confirmation long, meaning that it did like what we call a rally-based rally. It's a continuation of the rally.
Right.
I think he caught that second leg, if you will.
Well, I mean, and nice on the 4-hour time frame. So congrats, Kev. Put a little bread in your pocket. Always a good thing. All right. So I mean, if you guys have questions, I actually had one question, and of course, if you guys have questions, feel free to send those on in. I know this is having to give you zero chance to rehearse or think about this one, but since we're talking about luck versus skill, I don't question your skill. I've known you for many years. You've got a ton of skill when it comes to trading. What would you say is probably the luckiest thing as a trader that's ever happened to you? I mean, there's got to be some things where you go, wow, I did not see that happening in a million years. That was complete luck. What would you say would probably be the luckiest thing that happened to you? Hello?
Oh, are you asking me?
I'm asking you.
I thought it was a chat question, you guys. I thought Merlin wanted the response to the
No,
chat.
I'm sure they'll type in some of theirs, but I'm curious about yours, because yeah, come here.
The luckiest thing that ever happened to me, I found out how to sell puts and make income cash when volatility is exploding and you collect like $5 or $8 where you want to buy a stock anyway, and then you end up positioning long for that stock. So for me, whenever I learned that's luck, discovering a strategy that we can build our business on. I think that's luck, because out there in the industry, there are so many other strategies that I tried, and some of those can be very, very costly. And I wouldn't say that's, quote, bad luck, but if you keep trading it, gosh, you're gonna, that would be bad luck, right? You keep doing the same thing, expecting a different result. But discovering, I think, something that you truly understand and works for your personality and allows you to be more patient whenever you're trading, because I was trigger happy. Whenever I first started to learn how to trade, I was trigger happy, and it was very, very costly. And it took me years to realize that I was trigger happy, and that if I continued to just take teeny tiny tick profits, then I would have to trade every day. And, that could be a very stressful, like any other job.
Yeah.
So whenever I got more patient, it really helped me expand and go from, 10 ticks to 10 points, and to be a lot more willing to let things set up. And I think earning income using options while we're waiting for things to set up really does condition us to be more rule-based.
All right. Well, I was going to go a different direction. I was thinking like a specific trade. So since you put it that way, I would say probably the luckiest thing that happened to me was just kind of being introduced in 2014 to cryptocurrency. I have to say that was probably actually two. And my friend who basically showed me about day trading, sent me this article on day trading and then crypto. And then the other way I was looking at it, and this is maybe you can think about it as I'm telling the story. I was teaching a class for Irvine Online Trading Academy Center back in, God, I want to say it was like 2005 or 6. It was after I got back from Italy, so let's say 2006. And it was before class started. Class started at 6:30 in the morning. I was in there right at the open, and I had like this big position. I bought like 8,000 shares of, it was like a $4 stock. I normally don't trade penny stocks, but it had a really nice setup. I'm like, what, I'm buying this thing. So I bought 8,000 shares. I'm in it, and it just starts to run. And next thing you know, it's up like $1. I'm going, holy cow, it's up 20% already. I sold out of my whole thing. Complete luck. I was looking to make maybe a dime, right? Because a dime on 8,000 shares is $800. I'll take it. I would have been fine with that. So I walked the class through what exactly I had done, why I did it, and of course it was a bad example for them because they're thinking I need to now trade huge blocks of penny stocks. By the end of the trading day, that stock, which I sold out at like $5, was up to about $10 per share. And of course, all day long, every student is saying what? Why did you get out of that thing? Why did you stay in it? I'm like, I follow my plan. That was my rule. So I'd say that was probably the luckiest thing, just because it was not intended. I was meant to have this tiny little trade, and a couple weeks later, that thing was up at like $40 per share of this penny stock. It was crazy. Anyway, thought I'd just share.
I call that insanity. Yeah. That's just complete and total. That's chaos.
Yeah.
So in life, I think that we all experience some bit of luck every day, and thank goodness for the Irish, right? That brought it to our attention. And I was reading some of the chat here about the context of the strategy, and referring to one particular strategy, but knowing that is used with other products and other markets as well. So most people have more than one account. So to discover what strategy works good on one account, and then to correlate it with another account so that we can optimize volatility. For example, whenever we sell a certain product, like an option, volatility is high, and then we're expecting volatility to contract, which would then result in actually getting long the market. So whichever way in order we do things, there's going to be different products and strategies that tee up for trades based on market volatility. Mm-hmm. And we really have to be comfortable with that whole process. That's why I love the S&P 500. Merlin, you know that I used to trade the Dow originally. Yep. But then I realized that the Dow didn't include all of the movement from all the different groups, and the S&P does. And lately I've been keeping my eye on energy, because I did some allocation into the energy group, quite a few months ago, and have been anticipating that could get more opportunity for shorter term trades. So I've been keeping my eye on energy a lot. But I think that whatever products we trade, understand the relationship between those. And that's why I love so many online trading academy instructors like Brandon Wendell. I don't know if you guys know him, but he's like got a steel trap mind. He's like brilliant. It's crazy. He also tells really good jokes. But he really does a great job of explaining correlation and stuff like that. But it's totally got to make sense to the investor.
Sure. Well, I think it's funny, Tillie, because a lot of people make the point that I saw somebody today who used to be an online trading academy graduate. Now all of a sudden he flipped because he's with somebody else and he's bad-mouthing OTA, basically saying one of the problems is that you have so many different traders there that you're learning from, that they each have some different backgrounds and styles they bring to the table, and he views that as a very bad thing. I actually think it's great to look at more people, more traders, even though they may not be your style or tactic. To me, that's a huge benefit. And you mentioned Brandon Wendell, but you've got tons of phenomenal traders out there that, to me, I learn from every single one of them, whether it's a discipline tactic, a risk management tactic, which are most important, or just an overall strategy, kind of like was asked here, or was the question. Actually, Randall, you said, how does that strategy work? Refresh my memory. Which strategy? Just type it in chat there, because we talked about so much stuff. My brain may have skipped that one. But Adam says, what can either Merlin or Tillie recommend to learn selling puts? I don't do anything right now with options, but I want to learn from good info. Obviously I'm going to say, take a class on the Trading Academy. I mean, that's the boilerplate I'm supposed to say, but there's great content out there. I don't think you have to, those are the basic things, like selling puts. I mean, those are pretty basic. The 4, buy a put, sell a put, buy a call, sell a call. 3 of those I'd be happy to do. One of them, I'm not going to be selling calls unless it's a covered call. But do you have a resource that you use for your information?
Well, I think Online Trading Academy is amazing because it customizes trading for a particular individual's account size. That's what we specialize in. But as far as product knowledge, the Chicago Board of Options Exchange probably has the best product knowledge out there about option strategies, however many there possibly are, which are unquantifiable. So here's the problem with going to like the CBOE. Chicago Board of Options Exchange has a phenomenal website with terminology and descriptions of all the strategies that would be great to read about. But what they do not educate on is what causes the market to rally and what causes the market to drop, and how are you going to pick your strike prices. And a lot of traders end up using the option strategies with no understanding of demand and supply zones, of where to pick their strike prices, and they have to restructure their position over and over and over again, keep on buying time, if you will, until hopefully they get lucky. Talk about. Whereas with the Academy, and why I teach the Academy, is that we not only focus on where to choose strike prices to buy and sell, which is what the CBOE is never going to tell anybody. And then also how to customize it for our account size to not expose ourselves to more than set amount of dollars risk. But also it's based on our personality. Are you the type of person that, are you like a ready, plan, aim? A strategy for a planner is going to be a different strategy than for a fire, ready, aim person. I'm more of a results person. I like to do things based on results and then make changes to get the results that I want. But other people aren't willing to take that risk.
Mm-hmm.
People want to plan and have all the numbers ahead of time. Like an engineer is going to be a way different thinker than a mechanic,
Mm-hmm.
So you have to really factor in those kinds of things into the strategy. That's why the exchange, they provide quote education, but it's not customized like we do at the academy.
Yeah, absolutely. And I see people putting in some good stuff in here. I see Theo Trade. I don't know Theo Trade, Smiley Sean, but I'll take your word for that one. I know Options Alpha. Yeah, they have some decent information. Traders Army as well. I put one in chat right now. I met these guys at the Traders Expo years ago, the Options Industry Council. They do a whole bunch of free education. I believe that they are in line working with the exchanges themselves. So there's some great basic information. Obviously, when it comes to strategies and tactics, they're probably not going to have the complex stuff. But to Randall's question, and thank you for taking the time to type it back in, Randall. I know I ramble sometimes and I forgot what we were talking about. Briefly, I will go through what I think Tillie was talking about. And this is, I'm hoping, what you're asking about, which is selling puts and maybe cash secured puts. So it really depends, or whatever. There's different strategies. So let's say, for example, I'm looking at XLE and I've got this chart up right now. And let's say you're bullish on energy, right? And you have no position in the marketplace. You could, if you wanted to, say, at what point would you like to buy? So I'll let anybody else out there, somebody throw me a number. Where would you be interested? I'm looking at the daily of the XLE. Where would you be interested in buying energy right now? Give me a number. I've got my zone kind of picked out, but I'm just kind of curious what you guys think. I'll go by what anybody's number is. I'm waiting for maybe Randall. If you tell me on this chart where you think about buying it, I will map it out for you, and we can talk about selling puts. Okay.
I like the $48.
48? Yeah, you could do 48. I actually like a little bit lower. I was going to say 45 to be, a little more risk averse and go out there. So Batista says 45. He's the first one from the group in chat. Okay, so here's basically the way we'd be looking at it. So you could, if you wanted to, say, all right, I'd like to buy XLE, but I don't want to buy it at today's prices. I want to buy it when it comes back down to, let's say, 45. That's a pullback in this trend. So in selling puts, I bring up an options chain here. Okay, I got multiple people saying 45. Brendan says 40. How do you even find a strategy to try, Alan? There's easy ways to come up with strategies. You just got to start little. So let's go. I'm bringing up XLE's option chain. XLE. All right. So we go to sell puts, and you guys mentioned 45 is your number. So the put side's over here. 45s. You're not going to make a lot of money. Whew, gosh, you're not going to make much at all. This is for the weekly. So first thing I do is I go out 30 days on on options that I'm selling. And you notice 45 is going to get me 32 cents. So it says 32 to 40, so let's call it 35 cents and split the difference here. Basically what that means is I'm going to collect $35 for each option contract that I sell. So if I was going to sell one put at 45, which is this line right here, I would collect $35. And if it doesn't get down to this line in 30 days, by the option expiration, I just keep that money. If it does get to 45 or lower, I will now own 100 shares of XLE at $45, and I still get to keep the premium. So I'd technically be long 100 shares of XLE at $44.65. That's the basics of it. And this is where you have to look at that option chain. We arbitrarily chose $45, but you're not getting much premium there. So do you pick, the Tillie's line, which is 48, right? She said 48. Well, you'd be collecting about 80 cents. So that's $80 per 100 shares. And that would bring you to this line here. So it's about establishing where we think prices are going to drop to if you're selling puts, Randall. So hopefully that added a little bit of clarity. I didn't want to steal any thunder there, but maybe next time I can do a show more dedicated to that, because as Tillie mentions, I think it's a fantastic way to be generating income, whether you do have positions or not, right? You could own shares of XLE and be selling options against that, covered calls or something like that. Or if you don't, just sell puts. And, I have a portfolio that I run in right now that's 1% to 3% per month is what I'm looking for in that account. And I'm doing very, very, very safe trades out there. Not risk-free, but certainly much safer than, jumping on some of the more volatile stuff and trying to get 5 or 8 or 10% rate of return.
Absolutely. So whenever we run the numbers, compounded, 35, 40 cents, which, per contract, we on a $45 stock, when you run the numbers, where are you at? So the reason that we love cash secured puts is whenever you compound them, you can target, said rate of return, and you can get higher rates of return when volatility increases. So if the market drops, volatility increases, and those premiums are going to increase. Mm-hmm. So I think the luck, if you will, in trading that particular strategy is truly understanding market volatility and knowing that if we're patient and volatility increases, we earn a higher rate of return. And that's kind of a big odds enhancer, if you will, in that strategy. And at the end of the year, when you're running those numbers, it does add up. And we can also choose a variety of different strike prices over time, so that if it does break one of those areas where we want to buy, we could use that premium that we earned as a stop loss and offset our risk, and basically end up only risking as much as we're earning. And some markets out there pay a lot more premium. The more expensive the stock, oftentimes the more premium we earn, which adds a buffer for our stop. So if we get assigned those shares, we're also going to offset risk. So there's just a lot of dynamic, cool parts about that strategy that whenever you really learn it and think through it, you don't have to pick just one strike price. You can pick a lower one and have it for a plan B, if you will, and roll down. And that's when volatility really gets fun.
Yeah, absolutely. I'll give you guys another quick example. And this is to emphasize Tillie's point. It really is about understanding the instrument that you're selling options on, right? Because some are much more volatile than others. The example I'll go into is GameStop, right? I have zero interest. I have negative interest in opening a position in GameStop. But this thing's so volatile, if you're an option seller, especially selling puts, you're going to get some good premium. And I'll give you an example. Take a peek at this chart. Here's GameStop on a daily basis. It's trading at $209 right now, right? You guys can see that on the chart. Oops. Oh, gosh, now I'm hitting buttons all over the place. Wrong screen. There you go. You see the line at the bottom of the screen? That's $50. Could you today sell puts on GameStop at $50? Meaning if it drops to $50 that you'd be a willing buyer. Someone's going to pay you for that right. And now the question is, how much money is there in that? So it's at $209. $50 is $159 away from current price. It would have to drop 75% to get down to that level in 30 days. And how much would you be paid? Well, let's bring up the option chain. Here's the option chain. I'm clicking on the $50 strike right now. You get about $3, which means someone's going to pay you $300 to commit to buy it at $50. And if it doesn't get down there, which my guess is, guys, in 30 days, it won't be down to 50. It'll probably be down at 100 or maybe somewhere around that area. But you could still collect premium on it, even if you're not that interested in owning GameStop. That's some decent premium. I mean, in some of these levels that are a bit higher, moving this over here, let's say you thought about getting in at this level here, which is 125, right? If I go to the 125, I'm getting $2,500 to commit myself to buy it at 125. So basically, my average price would be $100 if I got executed here. It's crazy how much premium. Anyway, I wanted to show two examples there.
What kind of spreads are there?
What's that?
What kind of spreads does it have between the bid and the ask?
Great question.
Spread is, so if you got to get out, you know how much it's going to cost.
I was talking over Tillie at that moment in time, but she brings up something that's phenomenal. What was the spread like when something's that wild on the bid and the ask? Those spreads can be massive, and I'll read the spreads to you. At the $50 mark, you're looking at a pretty decent spread, actually. It's $2.80 by 305. At the 125, it's $25 by 26.50. And I mean, it would have to drop $75 in a month, which we can see it could do that at any moment here on GameStop. But that's just one way that we could use options, a selling option strategy on something that's very volatile to collect an income stream. That said, GameStop is obviously going to be a lot more risky than XLE, which we just looked at. But you could also be using these puts on SPY or market indexes, which don't move as quickly. But anyway, since the conversation was brought up, thought it might be nice to share it with you guys, some of those. And I'll go deeper into it in the future if you guys want. But, this is something, Tillie, I know that you've been doing for quite some time, is the option side of things and collecting premium, because you're looking for that continual income stream.
Yeah, and I love the fact that you guys are like asking about stocks and things like that, because I've been using index options forever, literally.
Mm-hmm.
And I tried to encourage myself to be a little more diversified and to actually consider individual stocks. And so I'm glad that you bring this to my attention, because I am more interested in taking on a little more risk, if you will, because stocks can go to zero. So there's that little bit of risk there. But, if we're making a couple bucks premium, if we want to get long that stock at that price, we could use that as our risk amount of our stop loss as well. So if it has all those built-in components, I personally would take a poke at that. And that's why I love being part of Merlin's show, because you guys, I feel like you guys are like positive reinforcement, if you will, to take what we know works in one market and apply it to other markets very, very conservatively.
Yep, absolutely. Tillie, tell me a little bit about where you're going to be. I just looked at the clock and realized, holy shnikes, it's been a long show today. I know you're out in Kansas City. You sounds like you're healthy right now. So do you have physical classes, online classes going on?
Yes, and factually in our center, we have a futures class going on right now. Taylor Frame flight in from Atlanta.
Nice.
You can take Texas. You can take the girl out of Texas, but you can't take Texas out of the girl. So he flied in from
he flied in
from Atlanta, and so we're having a good time. We have a options class next week, so we got a guy flying in from Chicago, and so yeah, I love being part of the community. I love reading the comments. I see some familiar names. I can barely read though the text chat, because allergies also mess up your vision. It's terrible to see. But
sure, it's not that cannabis. You sure it's not the cannabis impacting you over there?
No, but I want some of that oil for. I had a bunch of back pain whenever I had that walking pneumonia.
Yeah.
And I wanted to try some of that for my back pain. And I still want to pick those ETFs in the cannabis group.
Yeah, that's some good ones. All right, Tillie. Well, hey, thanks for two things. Number one, thank you for coming on today. I know it's been quite some time. We'll try to get you on your regular show. And thank you. I know you're studying a lot and don't have a lot of time to do the weekly outlook. But when you do it, we do get some great feedback on it. So thank you for continuing to do that.
Yeah, I love it very, very much. Great. Awesome. You guys have a great day.
You too, Tillie.
Happy St. Patty's Day. Enjoy. Be lucky out there.
We're all lucky. Lucky to have you on. I'll talk to you soon, Tillie. Thank you.
Great.
All right, bye.
Bye.
All right, guys. That was Tillie Allison giving us some insights into the luck of the Irish. No more Irish accent, I promised. And trade management. A question came in from Alan G. Says, why sell premium on underlying capable of Six Sigma? It's risk, right? It's all about what's your risk tolerance. And some people don't want to take on a lot of risk. Great, then you pick something that doesn't move a lot. But there's this adage that is steadfast and true in the financial markets, which is you cannot get more reward without taking on more risk. And as I showed you there with GME, and again, please do your due diligence. Don't just buy or start selling GameStop puts because it look like you make a bunch of money with it. Alan's right. I mean, this is a very dangerous instrument. It's been in play. It's been talked about in the media. The shit they're on Capitol Hill talking about it on how this is being manipulated. It's dangerous, but when you have something that moves that quickly and that fast, premiums are generally very high. So you don't want to be a buyer, right? We talked about this quite a bit. Buying, the premiums are so expensive, you might be completely right on picking your direction, and then all of a sudden, it does exactly what you thought it was going to do, but because you paid so much premium, you didn't make any profit. In this example, premium is so high, you really want to be more of a seller of options and take advantage of those people who are paying the high premium, right? It's kind of like saying, if you're an ice cube salesman and the weather is negative 15 degrees outside, no one wants what you got, right? Premium, you're not going to get any premium for your ice cubes. But if it's 95 degrees out and you got a basket of ice, people are going to be like, hey, I'll give you a buck a cube. All of a sudden it's in demand. That's when you want to be the seller. And right now it's a hot market. Love to tie it together there in GME, right? GameStop. I think it's a crap company. I think it's going bankrupt. I can't believe that it's trading at $209. I just look at people. I apologize to anybody here who owns it. But if you own GameStop at $209, you're an idiot. I mean, just get a tattoo that says Todoy on the top of your forehead, and then you can read idiot backwards when you look in the mirror. To me, it's just crazy that someone would pay $209 for GameStop right now. However, there are people who are doing it, and it all goes to risk tolerance and risk preference. It's not for me, but I actually have been looking at selling some put options on GameStop and saying, look, if it drops all the way down to $50, I might be okay to buy it there because I don't think it's going to go bankrupt tomorrow or next month. I think 3 to 5 years it's done unless they change their business model. But to me, those are the types of things, Alan, that you have to pay attention to and say, it's too risky for me. I know that. Then I'll stay out. Or I am okay trading that kind of risk. I will do it with stop losses in place or have a specific set of rules I follow, then I think it's okay. Yeah, the GME meme, the GameStop memes are awesome. Awesome. Why is premium for a call this high? Because it's still believed that this thing could be pumped up back up to $500. So there's so much uncertainty for it. That's just the way these premiums are. When something's that volatile, implied volatility is so high, puts and calls are off the charts expensive. So you could sell calls. If you had covered calls, like if you own GameStop, you could be selling covered calls against that. Brendan says, Doge memes still win my heart. There's some damn good ones out there. I think maybe what I should do is have a segment on the show called the meme of the day, but it's one of those things I don't have enough time to look at all this stuff. I have so many things going on right now. But anyway, great questions from the audience out there today. Thank you guys. I'm hoping that little demonstration on XLE versus GameStop really showed this huge difference in premiums, risk, and reward. Bottom line is you have to do what's palatable to you. In that portfolio that I mentioned, that I've been doing for quite some time now, where I'm basically striving to get between 1% and 3% a month, I'm sticking with ETFs that aren't volatile. So I don't say aren't volatile, but are less volatile. So for example, most of the time I'm in QQQ or IWM or SPY. Lately I've done a little bit of XLE. I've also done some silver, but just nothing but selling puts in that portfolio. They're called cash secured puts, and basically saying, I'm going to collect that premium. If it gets down here, I'm okay to hold it at that price or buy it at that price. If not, just give me that premium and your option expires worthless. Okay, what else? Did I see any of your last question? Too late. Did you see the screenshot? Alan, I did. Yes, Alan. And since you sent it to me, it is all your ploy to get me to go over an hour show. Son of a... all right, here we go. Here is the shot that Alan sent in. So Alan, thank you for the persistence. I do appreciate it. He sent me this screenshot, and it's on Bitcoin. And what you have at the bottom, I know it's a little bit hard to see. Maybe I can modify it and put it on a real chart as opposed to a screen capture here. You're looking at Bitcoin's price chart, and you're looking at, on the bottom, you have relative strength index, which is designed to give you feedback whether relative to itself, the security is overbought or oversold. Now, right now, it's really not giving you much of a signal. You guys can see right here where my cursor is. It's right around 62, 63, 61 on RSI. Anything above 70 is deemed to be overbought. Down below 30 is deemed to be oversold. And right now, it's expensive, but not overbought. What he's noted here is, you notice this yellow line that Alan has drawn, and that's these peaks in RSI. And what it basically is telling you, it's called a negative divergence, where the RSI is basically showing you that relative strength-wise, it's getting a little bit weaker. Now, I know it's difficult to say that when you look at the price chart of Bitcoin, the way it's moving, but internally, measured by its moves and rate of change, it's saying that it's getting a little bit weaker. And one of the classic ways to use this is if you see this going down and prices are still making higher highs, it's called a negative divergence. And in theory, it should start to pull this down. Now, I don't know. I mean, I don't know the statistics on how often that is true. Is it, a 60% success rate, 100%, 80? I don't know. But normally the textbooks will tell you that if you see the situation like we do here, notice this high back in January, that's this high here on Bitcoin. The next high in Bitcoin was significantly higher, but RSI was lower. Now we've got a new high, RSI is even lower. So I'm not putting as much emphasis on RSI here. Does RSI mean we should jump ship on Bitcoin? For me personally, there's not much that's going to make me jump ship on Bitcoin. I am in it for years on this one. I believe wholeheartedly that this thing's going to be well over $100,000. I told you by next year. It could probably be by the end of this year, the way things have been moving, and adoption by corporations on their balance sheets. So normally, Alan, I would say, let's say this is a chart of, I don't know, pick anything other than a cryptocurrency, let's say Microsoft, then I would be inclined to start looking for shorting opportunities in Microsoft. But because of my bias on Bitcoin, I'm not going to be looking for shorting opportunities. But I think it's a little bit of an outlier. There's a different market dynamic, I think, pushing Bitcoin to the upside. But you are correct in your assessment. This is a negative divergence, and normally this would pull it to the south side. Cool? Man, for a better entry? Really, you've got a couple different entry points here. Let me go back to a regular chart of BTC that I can mark up. Let's go I can go at BTC. The question becomes, are we going to get pullbacks in Bitcoin? I certainly believe we will, but how deep will those be? We had a significant sell-off over the last couple of days, and that might never go back there, right? do you think that 48,000 would be a good buy point on Bitcoin? I think so. I had a friend that I meet at the dog park on a regular basis, and he's just like, oh, I'm looking at 42. It's like, I don't know. I don't think it's going to get there. I think we're at a different dynamic right now. I know, Bitcoin hustler. Hey, man, at least I'm being transparent with you guys. I am clearly biased on Bitcoin. I am very bullish long term, and in this case, I'm not really worried about getting out. I will stay in it for a while, but yeah, I think at this point you're using kind of any significant sell-off to be a buy point back in. We were about to break way above 60K. I think so too. Guys, I mark my words, I'm willing to bet you that within the next 30 days, you're probably going to hear one of the major companies out there, I'm talking Amazon, Google, Microsoft, or Apple, one of those big four horsemen, say that they're going to now either hold Bitcoin or start accepting Bitcoin for payments for their products and services. When that happens, hallelujah, hallelujah, hallelujah. That's when you see things really start to take off. So it's just, I think we can all see that there's been this snowball of acceptance in the crypto space. It's starting to gain more and more acceptance by people saying, we will take it for payments for box seats for the Oakland A's. We'll take it for payments for tickets to Dallas Mavericks. We'll take it for payments to buy a Tesla. These are now major corporations that are saying, hey, you know what? We'll accept it as payment. That's further legitimizing it and bringing more people into the fray. Now all of a sudden corporations put on their balance sheets, supply is less, demand is more. It's a math for move to the upside. Wouldn't that after some pullback, institutions want good entries? Yeah, I agree. Institutions do want good entries, but remember, we're not dealing with something that has a huge amount of supply. It has a very small amount of supply, and that in lies the problem. You look at Ethereum, you got 100 plus million. You look at Ripple, you look at Dogecoin, you got over 100 billion of them. Okay, that's different. You've got 18 million right now Bitcoin, and a lot of those are lost. And my assumption personally is a majority of those are being held by people who aren't selling. So every day that pool of supply gets smaller and smaller and smaller, and here you are, the gazelle, looking for a little bit of water. You're like, oh, wait for the next rain. I don't know if that rain's coming, right? That water supply is not going to get bigger. It's going to keep dwindling, so get it while you can. It's my attitude. All right, what is that? Could this chart be shown the beginning of a head and shoulder pattern? It could, absolutely. You could argue here. It'd take a lot of work. Right now it's just showing impulse, correction, impulse, right? If it comes all the way back down to 45,000, then all of a sudden I'd look at this from a different perspective and be like, uh-oh. That make me a little bit nervous. You're beating my pirate t-shirt? I'm beating it? What do you mean by that? Watch GameStop goes into bit. Oh boy, don't tell me GameStop now. Yeah, they'll be buying Bitcoin on their balance sheets. But is the decentralized system growing? Yes. Not only is it growing, but because you have centralized entities causing more and more problems, more decentralized networks are happening. For example, if you look at domain names, like now some domain names are being blocked because of, we'll just say, things that might not be acceptable. You have a company out there called Unstoppable Domains, which now sells blockchain-based domain names, which once you have it, you can't turn it off. I think that this could potentially open a can of worms and some problems. Obviously, there's some things you probably don't need to see or want to see that are going to be out there now. But I do think more decentralized nature of economies are the way to go. If you look at somebody like Warren Buffett, he has been very against Bitcoin. And I've made the argument that the reason he's against Bitcoin is not because he doesn't understand the technology. I think if you look at his businesses, you look at Geico. Geico is a multi-billion-dollar corporation because it is a centralized network that aggregates data. If it's a decentralized market, he no longer has control. So when you remove central power, whether it's a bank, an insurance company, an online store like Amazon, when you remove that central activity, you get fair market prices because you have more competition, you get more distribution, you can't really shut things down, you can't alienate. To me, it's very different, and I think that that's a sign of the times, and we'll see more of it as we go forward. All right, let me bring up my economic calendar here. So, Alan, thank you for that chart of Bitcoin. Here is what we have. What platform do you use for crypto purchasing late? And I use a bunch. Right now for purchases, I'm going to use Coinbase Pro or Kraken or the two that I'm using. Large transaction volume in USD versus Bitcoin price is almost perfectly quoted. I haven't looked at that one. What else? Are there any other questions? Okay, so let's go look at your economic calendar. Let me get this stuff out of the way because clearly I've already I'm already over an hour. Damn you guys. Here's your earnings calendar for tomorrow. Just to give you an idea, here are some big centralized corporations, specifically FedEx and Nike, reporting earnings. Those are after market close. And then before the market opens tomorrow, you've got Canadian Solar, which isn't massive, but it is alternative energy. And then you have Dollar General, which is a $47 billion company, reporting earnings before market open. That's for tomorrow. Today, I thought I'd show you this just to start off with. There was a lot of interesting news today, economic data-wise. For Canada, I found it interesting that most of their CPI numbers were less than expected, and actually a contraction from the previous month, which obviously is showing less signs of inflation than anticipated, which is good. Really, the big news for today was Jerome Powell and the Fed funds rate staying at under 25 basis points with no real change in sight. As soon as I can get the plot chart, I will show you guys that and explain what the plot chart means, and kind of, even though we're seeing that number saying the same, there is a change in sentiment amongst some of the voting members, and that could pose a problem later on. And here's what we got cooking for tomorrow's economic calendar. It is a pretty busy day. I'll highlight in red the stuff I think is the most important. Up at the top there, you've got Lagarde will be speaking. That's a big one. She tends to be she used to be very positive on cryptos. Now all of a sudden she's becoming more negative on Bitcoin, so that could create some ripples in the crypto space. Of course, anything financial. You have the British pound coming out with their rate statement tomorrow, which is expected to stay the same, with almost everybody on that panel out of the 9 voting members saying it's going to stay the same at 10 basis points. Moving down to the bottom part, we have Canada with their non-farm payrolls, and the U.S. coming out with Philly Fed Manufacturing Index, unemployment claims, and natural gas storage. That is the main news for tomorrow. All right, I'm not going to go to the next question because I am out of time. Of course, hopefully you guys enjoyed that session with Tillie Allison. Always great having her on. Hopefully, I think this weekend she's going to do another edition of her Tillie's Market Outlook, which I'll post on Sunday afternoon, right around 1 p.m. Pacific time, whenever I get the editing done, since I do all the editing myself. If you like today's show, great. Give me a thumbs up. If you're new, which I didn't see any real new names out there today, hit that subscribe button. Always nice to get new subscribers and grow this station, as I'm trying my best to do. You can also email me at TraderMerlin@gmail.com if you have questions. Like Alan, he sends in pictures and charts and comments all the time. I would encourage you guys to do the same. I may not get to it right away, but I'll do my best to get to them as soon as I can. Now, for tomorrow, we're going to go, since I saw some comments about a lot of volatility in the Forex market today because of central bank statements. We got central bank statements tomorrow, and it's the British pound coming out with their central bank rate statement and announcement. Of course, my guest for tomorrow is David Warner, who has been incredibly bullish on the British pound for almost as long as I've known him. Last time he was on the program, or last couple times, he's saying, if there's one thing I would be doing, I would be long the British pound. And of course, just as an outro, I'll show you what that GBP USD looks like, just to give you an idea of how he's been doing. And he is more of a swing guy. He's going to be holding that one. It has shown a little bit of weakness over the past couple weeks, but take a peek at it over the past couple of weeks. Here's the weekly. Been a beautiful uptrend for the British pound. We'll see if he still is very bullish on that British pound for tomorrow. Of course, send any comments, questions, feedback you have to TraderMerlin@gmail.com. Until then, happy trading, everybody. Thank you all for the participation today. Have a fantastic St. Paddy's Day, and I will see you tomorrow. Take care.